Now we come to the rural improvement, the second topic of the chapter. In this, we will discuss about three topics. The three topics are rural finance, microfinance, and agriculture finance. So, in rural finance, it includes the financial services of various purposes and also from diversified sources that are tailored to be uh, that are tailored to need of poor people residing in the rural areas. So it's basically that rural finance includes the financial services of various purposes. Uh, like the rural finance is of diverse, it includes diverse purpose, and it has a diversity in the sources, which is tailored according to the need of the poor people. In microfinance, you can say that it denotes the financial services such as savings, insurance, credit, payment transfer, and etc. It is basically for the people who are low income level, who belong to the low income level. Then agriculture finances can be regarded as the part of rural finance, which is dedicated for finance of agriculture, for agriculture and related activities, like while the processes of supply, uh, producing, distributing, wholesaling, and finally marketing the crops. Next. So, in next topic is improvising the access of financial services in rural areas. How we can improve the access of financial services? Firstly, uh, building staff capacity. Like banks and financial institutions should encourage a greater interaction among the financial sector and the rural development employees for ensuring that the financial sector expertise gets included on the rural projects which has finance components. Nextly, help in improving and enabling an environment. Help in improving enabling environment, like banks and financial institutions having expertise for policy and influence with government should work on enhancing transparency, like the property and land registries and court system, and also eliminating the government subsidies on interest rate for the agricultural lending. Thirdly, it needs to improve building existing institution infrastructure instead of creating newer and costlier delivery mechanism that may not be viable. Like we have many financial schemes introduced by the government, but the problem is it doesn't reach to the people who are in remote areas or in the mountains or in the desert areas. It is very less possibility that these schemes and initiatives are used by those people who live in extreme remote areas. Then, fourthly, determining appropriate role for subsidies. Instead of interest rates to be subsidized for end clients, banks and financial institutions should use grant for promoting innovation and building the institution capacity. And next, explore possibility of technology. Financial institutions could help in reducing the cost of operation in the rural areas, and also improve in services being provided among the rural clients by the help of introducing new technology. Then lastly, by funding innovation in the delivery mechanism and products. Financial, there are a requirement of innovative solutions to meet the needs of which better fit income and the investment cycles of the agriculture activity. According to that, the funding innovation should be taking place. Next we will talk about role of financial intermediaries, intermediation in economic development. So when you think about a financial institution, the first thing that comes in your mind is banks, as banks directly plays an important role in the economic development of the country. And here are the some specific roles that banks do play. Like first is self employment program. Employment growth is an indicating sign towards economic development, so it is very necessary to take initiative in this program. Next, entrepreneurial development program. In this, EDPs have been launched successfully by the banks, specifically in the areas like it has been introduced in the specific areas, like according to the need of the specific area. Like in the year 1978, this approach was adopted, in which service area was decided on the specific area. Like previously it was at a district level, but now it is, after 1978, it is specifically about the area, like a shorter smaller place than the districts. Next we'll talk about integrated scheme for rural development. In this scheme, the financial intermediaries have been financing economically and socially depressed people through loans being provided to them for their many economic activities. In housing finance, for improving the dwelling houses, the financial intermediaries have provided housing loans to them. Then priority sector. There is a requirement based on guidelines issued by RBI for commercial banks for providing a certain percentage of lending to the priority sector that can consist of agriculture and its aligned activities like dairy, poultry, small scale and cottage industries, and other small industry and businesses. Then sixth, we will see that development of backward areas. For like preventing the regional disparities, the financial intermediaries are advancing loan to industry that are started in the backward areas. Then next, introducing economic system. Financial intermediaries are using computers for many of their activities, and there is a proper network through which these branches are linked. Next, we will talk about the structure of Indian financial system. The Indian financial system is distributed into four major systems. Four major subsystems. So firstly, we'll talk about financial institutions. These institutions are intermediaries which facilitate the financial system to function smoothly throughout the interaction of investors and borrowers. the financial institution is classified into two other categories, that is banking institutions and non-banking financial institutions, that are also known as NBFIs. So banking institutions are they actually mobilize savings of people. They provide mechanism for smooth exchange of services and goods. And the three basic categories of such institutions are commercial bank, and cooperative banks, and development banks. Then non-banking financial institutions include that the NBFIs also deal in mobilizing the financial resources, either directly or indirectly, from people. They deal in lending money but do not create credit. They do not create credit. NBFIs includes life insurance like LIC, then UTIs, Unit Trust of India, then General Insurance Corporation, GIC. So these are the examples of banking institutions, and these are the examples of non-banking institutions. Then next we will talk about financial markets. Financial markets acts as a backbone of the economy. It provides monetary support towards the growth of the economy. And this is the market in which there is trading of money and monetary claims. These two things takes place. Next we will talk about the two categories of financial markets, that is money market and capital markets. So a money market, it is a market in which short-term fund is lent and borrowed. This market deals with short-term assets that have maturity period of less than 1 year or 1 year, till 1 year. So for money markets, you can have the example of treasury bills and call money, the market of call money, then commercial bills market. These are the examples of a money market. Then let's talk about capital market. So these are till 1 year or 1 year, and capital markets are more than 1 year. So it is a market for long-term fund. The market deals in claims of long-term nature security and stock having more than 1 year of maturity period. The example of capital market is stock market, derivative market, and government bonds market. Next, let's talk about financial instruments. Financial instruments are the financial. This includes the financial asset, securities, and claims. Financial instruments include financial asset and financial liability. Financial assets represent claim for payment of sums of money, sometimes in future, and periodically payment in the form of dividend or in interest. So these are distributed into two categories, that is primary instrument and secondary instrument. So primary instruments are the instruments that are issued directly by the ultimate investor to the ultimate saver. It's directly linked to the investor and the saver. The examples of these instruments are, so debentures and shares are the primary instruments in the financial instruments. Now secondary instrument is these instruments are issued by financial intermediaries to financial intermediary to ultimate saver. The example is mutual funds. Lastly, we will talk about financial services. The objective of financial services is intermediating and facilitating the financial transaction of institutional and individual investors. So, financial service includes like hire purchase, lease financing, merchant banking, installment payment system, and factoring. So, these are the this is the Indian financial system, which includes financial institutions, financial markets, and financial instruments, and financial services. So lastly, we'll do an activity in which you have to form a group of 5 to 6 students, form a group with your friends and discuss the detail about the following topics. And you can also, after doing the after discussing the details, you can give a presentation in your class to make the concept more clear. So the topics are financial institutions, non-banking financial institutions, money market, capital market, financial instrument, financial services. After doing this activity, you will have a better understanding of the instruments and the financial market. And this, after doing this activity, you will actually as we proceed in further in the chapter, you will get the understanding more precisely.